The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January, let me get this right, 17th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. And if you can't dial in, no problema. We've got you covered. Let those fingers do the walking. Send me an email, steve@tfnn.com. Inside the subject heading, put radio show question in. Do it now. Don't wait till the end of the show, or you never know how long it takes for an internet service provider to get the mail from you to me out here. So do it now. No procrastination. Of course, in the Tiger's Den, well, that's called instant messaging. So any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow off only about 20 points, trading at 24,186. S&P's up 5, 2620 is the print. NASDAQ 100 up 8. Russell up 6. That's 0.4%. To the upside, looks like that is leading the charge dollar-wise. Spot volatility index is pulling back. It's up 63 pennies, trading at 18.14. Gold's off $1. Silver down 8 cents. Light sweet crude off 46 cents. Leading the charge to the upside dollar-wise, you got Booking Holdings up $42. That's 2.5%. Regeneron Pharmaceuticals up 3%, or nearly $12. Intuitive Surgical up 10. Domino's Pizza up 9. Now that's a pretty decent move. That's 4%. To the upside, to the downside, Mercado Libre is the big dollar loser off $8 or 2.5%. Signet Jewelers, oh, I don't have any charts posted. Well, that's a bummer. Hey, yeah, really a bummer out there, but we're going to take care of that. Uno momento, por favor. This way you can follow along. So we haven't gotten to a chart yet. We're just really reading what's leading, what's following. F5 Networks is off $5 or 3%. Baidu's down $4. Vail Resorts off $3.70. So we can look at what you want to look at. No requests thus far. So let's just go take a look at the general markets out here, get a feel for what they are doing or aren't doing, what it is that we're going to watch. Let's look at the short-term time frame. The short-term time frame that I'm referring to is the 30-minute time frame. Why the 30-minute time frame? Why not? Why not, is what Stevie says. If we take a look at the NQ, I don't know who the lead dog is here. Is it the NQ? Is it the Russell? Is it the Dow? Is it the ES? I don't know. But here's what I do know. If we take a look at the NQ, if you're wondering, hey, when are the sellers going to arrive? Well, then they should arrive right here, right now. They waited for the 1 o'clock show. Yeah, it's that simple. Now, it's not that simple, but if we take a look at why would Stevie say that, the reason I would say that is because if we take a look at the old Tommy DeMark setup, 9 count, the old power of 9 out here, what we're going to see is a little green dash line. That green dash line is resistance. And what we've seen take place so far, take a look at where we're at right now, is we saw count number 9 form at 1230. Now, typically the high forms right around counts 8, 9, or 10. So, in essence, the bar after 9, that's where we're in right now. Of course, this bar doesn't close. This bar never closes. I'm just kidding. This bar doesn't close for another 19 minutes is what it looks like to me on my screen out here. But the point that I wanted to make is that this is going to be helpful to you to understand what's going to take place over the next several hours out here. When you have one of these setup counts, which we have to the upside out here, fail below that trend line, that setup trend line out there, well, that can be, I don't want to use the word ominous, but I said the word ominous. Its interpretation is it's failed. The rally here, just the last, using a half-hour chart over the last many hours out here, the rally has failed below resistance. It's something to note. Likewise, if price is able to close above, in essence, Stevie's green dash line, it's not really mine, but I'm going to borrow it for the time being, 66.99, excuse me, and a quarter. Well, then remember, nothing more bullish than a failed bearish pattern. The way that you'll know whether or not there's any real sellers out here, first price has to take on Stevie's green line. That's a squiggly line out there. That's at 66.75. But the bottom of its 30-minute profile is down at 66.68. That's what price would really have to break through in order for price to get moving to the downside. So right now, we're just consolidating. It appears we have a failure to take out resistance in the NQ on a 30-minute base. So we've gone to short-term time frames out here. Why is that important? Well, what's important about it is really the daily time frame for the NQ. You see, the daily time frame for the NQ, you probably already know this by now, but if you didn't, yesterday was one of those perfect A to B equals CD patterns that you and I have been looking for inside the NQ. Its one-to-one price extension was 67.25. It actually yesterday got up above 67.25, but not by a lot, just by a smidgen. More importantly, yesterday, you had really two candles form. Well, really one candle, two interpretations of that candle. Yesterday was both a doji, a little doji in Stevie's window. That's where the open and close is relatively the same, really. That's as good as you can do. It's virtually the same. Or relatively small bar width in a bar that, body of the candle that is out there. We had that. It was a little doji, but it was also a shooting star. Shooting star is the opposite of the hammer candle. Shooting star is going to take place as prices moving to the upside. It's a bearish candlestick. Whether that's going to lead to bearish meaning out here, only time will tell. But if we do see a lower close today, what you should anticipate is the NQ is ready to roll down and go test Stevie's red line. It's 64.77. What if it does that? Well, if it does that and it continues lower, well, then we're going to go ahead for the swing point or maybe even the December lows out there. What happens if price doesn't finish lower today? Well, that's all depend. It all depends. If it finishes where we're at right now, then it's kind of a draw for the day. If it closes above yesterday's high, well, that would be bullish and say that the NQ is ready to take on the 68.85 level out here. So that's the reason that we looked at the short-term chart, because the daily chart says, something to think about. And since we were thinking about it, why don't we go take a ride on the reading. Let's go read the NQ 30-minute chart. Dow's off 11, S&P's up 6 points. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So a couple of questions that have come in here. One is just from a cell phone / email, and the question is 2640 this for the S&P the same target? And I apologize, I don't know what you actually mean by the target out here, but let me try to do this and expand upon what we were talking about just a few minutes ago when we were looking at the NQ. And let's do this because we can kind of kill two birds with one stone. It's not really what I mean, but to say out here, we can take care of two questions in one screen out here. And that is a request by Jay in the Den to go ahead and take a look at the TAS daily and weekly profiles out here. And this will also assist with regard to the question. Well, we were talking about the NQ specifically, and we were taking a look at the A to B equals CD pattern. Maybe that's the pattern that you were referring to. Is that the same out here? Again, I don't know, but in order for the message of yesterday, which was that there may be a Gartley sell pattern that has taken place inside the NQ, because we had the completion of an A to B equals CD, we had a reversal signal, which was the shooting star, you still need to see support being broken. Ideally, what you do is you get some follow through. The shooting star says, okay, we should see lower price. So take a look at that for the NQ. Take a look at that for the NDX 100. They both formed the same candle yesterday. Is there a lower close in the NDX 100? If there's not, then the candle message from yesterday is somewhat suspect. When we take a look at the TAS market profiles out here, and Jay and you, each of you are looking at the daily time frames, which are the blue ones, and the green ones are the weekly time frames. What we know about the NQ itself is that it has tested and rejected old resistance, which right now is new support. Old resistance is the top of the daily profile. The top of the daily profile is 66.45. We're at 66.93. If yesterday's shooting star is going to have any meaning, price needs to get back underneath that level. With regard to the weekly profile, it's 66.29. So it's nice because we have both of them near each other. Now, maybe it doesn't happen today. Maybe it happens tomorrow. It is a weekly profile, for goodness sakes, out here. But if the meaning of some type of top is to be in place out here, support has to be broken. When we look at the ES, it's above support. Old support or new support was old resistance, the top of its box, 25.99. If we take a look at the Dow, it's well above the top of its weekly and daily profile. If we take a look at the Russell 2000 yesterday, and here's where you get the rub. Yesterday, the Russell 2000 closed above its daily bearish structured profile. Nothing more bullish than a failed bearish pattern. Today, this morning, we saw a test of that level. So far, it's been a test and rejection. That level specifically is 1450.90. So even though we have what looks like some topping patterns out there, it has not proven itself to you or I. And until it proves itself, well, it's suspect. So I hope that answers your question with regard to the S&P, so to speak. And if I didn't, if I just simply go back to the S&P 500, just to be thorough out here, and just in case you were asking about the A to B equals CD pattern, it did not complete its A to B equals CD pattern yesterday. And what I mean by that is if we take a look at the A point out here is going to be the low from December 26th. The B point is going to be, I think I got this, December 28th. The C point is going to be the low of January 3rd. Oh, I take that back. What was Stevie saying? Yeah, it was the one-to-one A to B equals CD. That did complete for the S&P as well. So there is your Gartley sell pattern. But again, no confirmation. You've got to see support, or you'd like to see support fail. It has not done so. Jay was also asking about Stevie's red lines out here for the various instruments. So here is a bonus. You've got the daily and you've got the weekly. You'll see column number 4 on the left says daily, OUL support. Those are your numbers. Since it shows support and nothing is in the resistance column, we know that price is currently trading above support. That is short-term bullish, whether it's counter trend move or otherwise. If you take a look at the weekly time frames out here, what you're going to see in column number 1, 2, 3, 4, 5, 6 says weekly OUL support. You can see the Russell is above the weekly level. That's bullish on that time frame, whether it's the equity futures contract or the cash indice. The semis are above that. The composite, NASDAQ composite is above that. The New York Stock Exchange is above that. The New York Stock Exchange International set of top 100 companies with inside it, prices above it as well. So there are your Stevie red or green lines for the various instruments out there. Another question that came in here. Let's go take a look at it, see if we can get back there. This comes in from Brent in Martinez, California. Brent writes in, he says, hi, Steve. Hi, Brent, by the way. Could you please go over the spot volatility index and any signals we should be looking for that might indicate a possible change in trend? Thanks, as always, for your analysis. Happy New Year. Happy New Year to you as well. And so let's go take a look at the spot volatility index. And it's a great question, and thank you for asking that specific question. Very pertinent to what we should be looking for as well out here. And what I'm going to say is the only pattern, the key pattern to give us some type of signal is where is the closing price. So at 1:24 in the afternoon, not so much. But we can take a look at what should we be looking for. So far, the lowest closing low in the spot volatility index, when I say lowest, I'm referring to, the last several weeks out here, is January 11th. Today is January the 17th out here. On January 11th, we saw the spot volatility index close at 1819. It's trading right now at 1831. In other words, it's trading above that close. We're looking at the bottom panel of our chart. We can see that price is below the 50-day exponential moving average. That's the yellow line. That's at 2151. That would be something else to look at. But right now what we would be watching for, Brent, is do we continue to see closes above 1819? In other words, we have a higher closing price out there. In other words, what we have out here is a possible divergence. What do you mean divergence? Well, divergence because if we look at the close on January 11th, here I've just got candle sessions out here. That close was 25.96. What was yesterday's close? Yesterday's close inside the S&P 500, by the way, was 26.16. So we have a rising closing price. I'm not going to change this line out here to, or the candles to lines, but we have a rising closing price and we have a rising spot volatility index. Those are always, and can't really use these as a timing tool, but they are signals to us of a possible change in trend. That's what you would ask for. How do we know that? We know that because we can go back and we can look at those patterns out here. Here you see a few of them on my screen that have led to some type of retracement. Never tells you how deep. By the way, what I'm referring to, if you're just listening in on this, because you're listening on your mobile device, here, just go back to June 6th of 2018 through June 15th, 2018. You'll see the S&P was making higher highs. The spot volatility index was making higher lows out there. Same type of pattern that took place between July 18th and July 26th inside the S&P 500, inside the spot volatility index. So, Brent, excellent question. Thanks for writing in. Thanks for taking the time to write. That's what I would be watching for. The closing price on the spot volatility index. Do we continue to get higher lows? And if we don't, that pattern goes away. There's nothing for us to take a look at there. Steve Rhodes with TFNN. Right.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So for Tucker in the Tiger's Den, I'll get it out. Don't worry about it. We're going to go take a look at light sweet crude. So we're looking at the February contract here for light sweet crude, and Tucker, I think that what I would focus on is where does light sweet crude close tomorrow? Because what we had tomorrow and then, I suppose we really have to come back and look at it on Sunday night. See on the very right-hand panel out here as we take a look at the color of the bars. And the bar color here is orange. And typically, not always, typically when you see an orange bar forming, well, when an orange bar is forming, it's telling us that what the market is trying to do is generate a new set of market profiles out here. For example, best case in point out here is if we take a look at the orange bar that formed inside of light sweet crude here, we just kind of expand it. This was on January 14th. See how the bar was orange? At that stage, price was trading above its market profile from a daily standpoint. Bar forms what happens on the very next trading session on January 15th. Brand new market profile forms. So here's what you know. You know that there's resistance at the top of the box, 53.31. You know that the structure of this box is bearish. Bearish, directionally speaking, from the standpoint that the center line, the point of control at $50.13, is closer in proximity to the top than to the bottom. This says that sellers should be able to explore the entire pricing area. Now, that won't come to fruition until they can bust through 50.13. So you'd be watching 50.13. Right now, things are just consolidating, with inside the box out there. That's not unusual. That's usual, so to speak. No breakaway when you take a look at light sweet crude priced in dollars out here. 53.31 would say, okay, price is ready to take it to the next level. So we know that when those orange bars form, that's really what I was trying to say out there, that a new profile typically forms. In essence, that's what happened with our weekly time frame back in December 3rd, 2018. So you have a new profile that's forming. So even though price could close above the bottom of that box, that is at 51.86, can we really say what that means? And I think the answer is, well, we can say, but it probably is not going to be worth much come Sunday should a brand new profile form. So here's what we know. Pricing basically up at a resistance level. And that's really all that we know, just up at near resistance. If it can close above 53.31, great, price should move to the next level. Where's the next level? Now, that is a good question. At this stage, we come back to the daily time frame, that could be an A to B equals CD to the upside. There's only one way that Stevie can draw this in here. And the way that I would do that is I would take the low from December 24th, and I'd run up to the high on January 11th, and we'd come down to that low was a one-day, in essence, wonder out there. And that's the low from January 14th. And this would give you an upward price projection of 61.33, 64.31, 68.10. Those are the one-to-one and expansion areas of that A to B leg out there. Prices at resistance. Not saying that this is going to be the A to B equals CD pattern that unfolds. Not until price would to close above the high from January 11th. That high was 53.31. So Tucker, one of my favorite names out there, because I like that movie about the Tucker, the car out there. I hope that that helps you out. Now, folks, come on, get in on the action out here. Remember, the only way that this show is going to be worthwhile is for you to send in an email, steve@tfnn.com. Tell me what it is that's on your mind. More so, what it is you want me to take a look at, or inside the Tiger's Den. That would be a beautiful thing, because then I know which direction to take this in. Right now, I'm just kind of wandering through the charts out here. But as wandering is what we're going to do, because I don't have any other requests. Let's take a look at the New York Stock Exchange. Really haven't done this too much here in the past couple of days. And by the way, tomorrow's show will be coming to you live at 8 a.m. It'll be pertinent with regard to 1 to 2, but you can also send me some questions early in the morning that you'd like me to cover during the show out there. Be happy to do that. Here we're taking a look at the New York Stock Exchange. We're taking a look at its advanced decline oscillator. That's the difference between its advancing or its net advancing declining issues on a daily basis, looking at the difference between the 19 and the 39-day exponential moving averages of those levels out there. Ooh, that's a mouthful. The bottom line here is up at the 256 level, which is really got, telling you, tons of market breadth out here. If you're wondering why is the market so resilient, well, there's just gobs of market breadth. Really, there are gobs of market breadth. At some point in time, the advanced decline oscillator reading is going to make its way back down towards the zero line. But right now, it's just not there. Is there anything bad that we can infer here from the advanced decline oscillator? No, there's really nothing bad. So let's not spend any more time there. Let's come back here and take a look at some stocks that are moving and grooving. Oh, I heard Tommy say that Netflix is out with earnings after the bell. Let's go take a look at Netflix, see if there's anything that we can figure out here. One of the things that we could figure out is if Netflix has just if the buyers and sellers, if shareholders are just really disappointed in what Netflix is going to say out here, the price you'd be watching for is 341. You're at 352. That's a blip out there. Why 341? Well, because 341, even Steven, happens to be the top of its weekly profile. We're coming into the end of the week out there. If price finishes above 341, price will be above resistance. Where will price then head to? Excellent question. I'm glad you asked. And that question, the way that we'd answer it is we'd say 374.24. What? How did you come up with that? Don't you just love how I talk to myself? Probably not, but I do. I think it's quite funny. But 374.24 is the top of its monthly profile. I know it's not the end of the month, but right now what we know is that is resistance. You get above 374.24, and then you go back to its all-time highs in the 425-ish range out here. So what's that saying about Netflix? Do we know which way things are going to lean? At this stage here, because we've had several gaps to the upside, almost like on a daily basis, but not really a daily basis. Well, let me see here. NFLX. First question we should ask ourselves is, where's Stevie's red line? 316. So should things disappoint, another level to be looking at to the downside would be 316. If price moves down there, it's a $40-ish type move. You know, people might be saying, that's it, game over. When reality is all that would be a test of support. Below 316, then we've got a different meaning out here. So what do we have inside of Netflix that's going to give us any kind of signal out here? What do we got? Let's see, where are we at in our wave count? You know, it bottomed on the 26th with a Tommy DeMark 9 count. That was the day before. The 8 count was the bottom. You're only in wave number C. You've got a rising price oscillator above zero. Everything looks really pretty good for Netflix out there. Looks to me like it's going to not disappoint come the end of the day. Hey, let's go out to Ormond Beach and speak with Mike. Mike, thanks for calling. Thanks for holding. How are you today? We have Mike. Well, I'll tell you what. We're going to go get Mike, but we're going to go back to Mike when we come back from this breakout here. I do hear the music in my ears. Steve Rhodes with TFNN.com. We get back from this break, we'll go talk with Mike in Ormond Beach about the S&P 500.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 10, S&P's up 8. NASDAQ 100 up 11. Let's go back out to Ormond Beach, see if we can find Mike. Mike, thanks for calling. Thanks for holding. How are you today?
Pretty good, Steve. Steve, with the evidence you see in front of you now, as soon as this bounce completes, do you think that we'll get down to the lows that we had in December 26 or possibly exceed them?
I do. Yes.
Okay, I've been watching this bounce go up and volume decreasing pretty much every day, and I'm just sitting here waiting for a bearish candle confirmation to sell it short.
Yeah, look, I think there's a couple of things that we need to do out here. One would be, wait for the cavalry to arrive, and you talked about that, a bearish reversal candle. We certainly received that yesterday inside of the NQ. I think where else did we get that? May have been, let me see if the ES had that. I don't recall. No, didn't get it there. But so I think to put it in perspective out here, I think we need to see levels of support fail. And it's nice when we're so close to those levels. So when it comes to the S&P specifically, what I would be focused on is the ES Mini. So far today, it's been a test and rejection of the top of that profile. That price had closed over 2 days ago. It's at $25.99 out there. Granted, we're at 26.22 right now. Still, that's not really a huge move to the downside. I think at a minimum, Mike, you've got to see price close back underneath 25.99. Now, it's very possible that price will find support at the bottom of that box. That's what you and I don't really know, which is 25.51 out there. Because that is a bullish structured box, meaning the center line is closer to the bottom, if price were to close below 25.51, then we're on to what Stevie has concluded the market is going to eventually do, or should eventually do out there. Just because it's what I anticipate is going to happen, it certainly doesn't mean that it will, but the odds favor, the probability favors that's the way that things will unfold out here. So I think it's got to be more than just a bearish reversal candle. You certainly need to see follow through to the downside, much like we're looking for in the NQ. If we don't get follow through to the downside, okay, then we have to look for some type of new pattern to unfold out there. You kind of get the feel for what it is, or at least how I'm trying to interpret it.
Yeah, we look for the bearish confirmation, and then we just take it one step at a time at each support level and see if it's going to break it and go further.
Yeah, because price can certainly move further. We're at an interesting inflection point, certainly coming into tomorrow's trading. And this chart out here, and I shared this with subscribers this morning, because it's like, hey, we've got all the makings of a top. But that doesn't mean that that we're there. And so I said, I'll update you at 3:30 this afternoon or around 3:30 to let you know what the market is doing. This chart here takes a look at and Jay had asked about these levels inside the Tiger's Den, but he really didn't ask about the weekly levels. But now when we take a look at the weekly levels in the chart out here, we can see how important they are. Because what we know is that when price is able to get above, well, first of all, these red/green lines on a weekly basis, just to describe them, we can see how they have basically been at resistance for months out here. And the counter trend rally has now gotten up to those levels in the ES, in the NQ, and the Dow is just a smidgen away from being able to test that. So the interesting thing here, Mike, is that the Russell 2000 weekly is above Stevie's red line out there. And so the weak link is suggesting that the counter trend rally has more to go. Is it the leader? Can it lift all boats higher? No, but when it is out in front, it's a good message out here. So we're at this inflection point, and if we see it close above Stevie's green line, red line, I should say right now, that says there's more counter trend rally to go. The opposite of your question, is there a possibility that the low from December 26 was a major low? And the answer is absolutely. And the reason is because that was a Gartley buy pattern. So, but it's possible. My mind is open to it. But to go back to a statement that you had made, Mike, yeah, I still expect that we're going to see the market head back and test the lows.
Okay. Well, another thing too is a lot of technicians use, different moving averages, and right now we're up against a 50-day moving average. A lot of people think that might be an area, but again, we have to wait, as you say, for the cavalry to arrive and, bear confirmation.
I found it interesting yesterday. The markets made it to where we basically were looking for them to get to, but now we just need to see the so-called proof in the pudding, and that's where the beauty of whether it's Stevie's red line, which by the way on a daily basis is way away from where price is trading, or we can use these TAS market profiles, or, as you mentioned, a moving average. If there's a moving average that works for someone, then they should go ahead and use that and try to use that as a gauge for success or failure out there. So, yeah, that's, great question. Just like Brent's question about the spot volatility. So take a look at the inflection points that we're up against. And Brent asked a great question with regard to, is there something in the VIX that we can take a look at that would be a signal? And so the rising bottoms there, which we don't know what it's going to look like at the end of the day, does the spot volatility index close above 1819? And if it does, it's just another message. Doesn't mean back up the truck and go short. It doesn't mean that, because we don't have these confirmations that you and I are looking for. But it is another indication. So we got that. You've got the 50-day moving average, as you said. Just a number of patterns that are out here. The question is always, can it be that easy? I mean, if we're all looking for the same thing, maybe we're not looking in the right spot. I don't know.
Yeah, and something else I have in the back of my mind, I guess tomorrow's options expiration, correct?
Yes. And David White is the expert there, so I don't know what the options curve. I don't know what the options curve says. So tomorrow could be, but if you listen between, in another 15 or 20 minutes, he'll probably cover that and give us all an idea as to where expiration is set to for the S&P 500.
Yep. Because, I mean, I've seen in the past sometimes we get up against a resistance point and it might be close to there for a couple days, and then options expiration would be a day where you possibly could get the volume to blast through a resistance point like that.
Oh,
So
no doubt.
that's also in the back of my mind.
Yeah, no, and it doesn't, if price continues to move higher, it doesn't negate that this is still a counter trend rally, as one of the options out there. It doesn't negate a Gartley sell pattern. It just says that the Gartley sell pattern didn't really complete or get confirmed at the 1-to-1 level.
Right.
That's the beauty of Japanese candlestick charting, as you know.
Yeah, that's something very important that you taught us, Steve, that you can extend a Fibonacci extension
Sure.
way beyond the 1-to-1 and look
Absolutely.
for the confirmation to tell you when it's over.
You bet. Hey, thanks so much for calling. Have a great day, Mike. We'll be right back.
Thank you. Bye.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So look, I got a blast from the past. Now I've got like 4 or 5 different requests out here, and I can't get to all those in the next couple minutes. So if you send in a request and I didn't get to it, I will go ahead and make sure I do that tomorrow morning between 8 and 9 when I do the show. So I don't know which segment, but I'll make sure that I get to your requests out there. I do appreciate you taking the time. For example, Paul S. wrote in, and he wants to go ahead and take a short position inside of Twillo and he's looking at the 106 type level. Now, inside of TWLO is the ticker symbol out here, and I guess I can understand what you're looking at, or maybe not looking at. This is what Stevie sees out here. What I see is the potential for a 3 drive to a top pattern. And what that looks like here is I'm going to use the trading day as from November 19th as one of as drive number 1. Then I'm going to come down to November 21st. I go all the way up here to this Rhodes momentum indicator signal on December 13th, pull down back here to the date of December 25th. And then, you know, whether it's today's high, yesterday's high out there, you can see this just really kind of a beautiful 3 drive to a top pattern. Now, like Mike and I were talking about, Paul, you really need to see some type of bearish reversal signal. I'm going to get rid of the 3 drive pattern, and we don't really have it. We were talking about the shooting star earlier, and so if I take a look at, there was a shooting star out here on the trading day of January 12th. And thank you for writing in, because you're helping me to make the point, just how valuable some of these tools are that we use out here. What we saw take place the following day, that's a bearish reversal signal. That should have been your 3 drive to a top pattern, really, right there. What did price do the following day? Goes down and tests Stevie's red line, the oscillator unchanged line, as a cool level, really important level of either support or resistance out here. So until price closes below that, I know you're at 106 and this is only traded at 103. I don't know. Have to really see what takes place when price gets up to the 106 level out there. But right now, price is above resistance, so it looks like 106 maybe is on the way. So thanks so much for writing in. Folks, thanks so much for being here again tomorrow. I'll be recording this show between 8 and 9. Have a terrific Thursday, a fantastic Friday, an extraordinary weekend, and then, of course, we'll see you back on terrific Tuesday of next week. Take care, folks. See you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.